Welcome to today's Morning Report on Wednesday the 2nd of September with me, Richard Perry, market analyst at Antec Markets. European trading sessions fairly neutral, actually, fairly settled. It's interesting because we've had obviously this huge market volatility in the last few days, well, a couple of weeks actually, and just signs overnight of a little bit of stability coming through in the Asian markets really. The US futures have started to sort of find a bit of support again after significant selling pressure through the Wall Street markets yesterday. 3% lower on the S&P 500, but does seem to be a bit of an sort of the selling pressure abating somewhat overnight, and that sort of filtered through Asia markets and again into European markets. We're seeing forex markets also reasonably settled once again. Only really the euro and the yen a little bit weaker against the dollar, but the commodity prices, interestingly enough, are commodity currencies are fairly settled against the dollar today. Here we have the dollar index, which is, as I said, just finding a little bit of settling going on here. I'll show you the VIX, which had a sharp move to the upside yesterday, but I think if the markets are going to continue as they are today, I think that VIX will be again coming backwards. In terms of the oil price, just incredible volatility coming through oil, and again it's reasonably settled. So it is 2% lower, but it's reasonably settled, and it hasn't yet really sort of decisively continued that sell-off that we saw yesterday. So signs, as I said, of a little bit of consolidation through these markets. We've got some more data today, more economic data. We've got first of all the ADP employment numbers. Let me just recap overnight. We had the little bit of Aussie data. The GDP came out slightly worse than actually expected at 0.2% on the quarter. Aussie dollar really not having any major reaction at all to that data, which is interesting. And recently, just in the last half an hour or so, we've just had the UK construction PMI. Again, UK construction PMI came in line with expectations at 57.3, and to be honest, it's a very small amount of the UK GDP, only about 5% or so. So it doesn't really have a significant impact, but markets will be looking towards more the US data this afternoon. First of all, starting off with the what are we looking at for ADP employment? Here we go. ADP employment at 115 is the ADP employment, expected to slightly improve to 200,000, but to be honest, it is pretty much just solidly suggesting that we're going to have, a solid payrolls data probably on Friday again. Probably more important will be the factory orders. Now, that's at 3 o'clock. Now, the expectation is we had 1.8% on the month last month. 0.9% is expectation here. But what we're going to do now is see this huge July reading of last year. 10.5 it was revised to ultimately, and that will drop out of the figures, and that's going to result in a sharp slowdown in that. But you could balance that out with the fact that the subsequent month was equally as sharp to the downside, so those 2 months pretty much balance themselves out. But you'll only get that coming through when that data comes out again next month. And then at 3:30 we've got the oil stocks, the weekly oil stocks, forecast to be flat on the week, actually, pretty much flat after a surprise drawdown of 5.5 million barrels last week, which actually gave the oil price some support. Anyway, my chart of the day, interestingly enough, I think it's interesting, is the euro sterling. Now, the reason I think it's interesting is because on the daily chart we've got this rally that we had in the last sort of initially that was the huge run higher in the euro that we saw a couple of weeks ago. Consolidation subsequently, but again strong run higher in the euro. But look at this overhead barrier of this. Put a sort of like a resistance band in place, 79.30. There or thereabouts, up towards 74.80. Look at that. How many times that resistance has come into play, that band, and again seems to be playing a role today. Now, an initial breakout would actually imply initial breakout above what is that, the high of the 24th of August, 74.23. That would imply sort of 180 ticks of upside, but that is a huge resistance at 74.80, and it'll be very interesting to see if the euro can gather that that sort of momentum, because if it does, then that is a massive base pattern. We're already seeing the euro sort of finding support above the moving averages. So is this indicative again of further turnaround in the euro against the sterling? Further suggestion that maybe the Bank of England will have to be continuing to dial back on expectations of a rate hike. So there are a lot of implications from this chart, and the momentum indicators are certainly improving. MACD lines rising nicely, stochastics positive, RSI positive, and yeah, it is very interesting that we're coming up against this resistance. On the hourly chart, though, it is sort of more range bound, you would argue. Slight drifting of the RSI on the hourly chart in the last sort of 12 or so hours, as the MACD lines have also crossed back lower again, interestingly enough, and the stochastics are sort of not suggesting we're going to get that breakout, but the chart is still fairly positive, certainly positive on the daily chart, and exactly how we see the treatment of this big resistance band, sort of 79.30 up towards 74.80, will be very interesting for the medium-term outlook of this, because a breakout would be a significant move above 74.80, have big implications for markets, or certainly for sterling anyway. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.